Of course, a very rough year, but there is some optimism out there, at least for some people who think maybe the worst is behind us. Peter Schiff, president of Euro-Pacific Capital, not generally one of those highly optimistic folks, but we invited him to join us anyway, at least for some counterpoint. And Vince Farrell is our guest host for the evening. Peter, let me just begin. You had a very interesting column in the newspaper over the weekend, I believe it was the Wall Street Journal, in which you said that basically the idea that the government can do something that individuals can't do in the face of a recession is sort of fallacy. In other words, the idea that the government can spend when everybody else, businesses and individuals, must tighten their belts is hooey. Right.
No, it's a fallacy. What's happening is Americans are broke. We've borrowed all this money to spend, and now we can't borrow anymore, mainly because the creditors have reached their limit. They don't want to lend anymore. And so the government is borrowing for us, but they're forcing us deeper into debt by taking on additional liabilities. But we need to start paying off our debts. We need to start savings again so that we can have money to lend out to entrepreneurs, to start businesses, to make capital investments, so we can go back to work producing goods instead of consuming them. But the government is simply pouring gasoline on a fire that it's set, and it's going to do a lot of damage with all these stimuluses and bailouts.
Vince, Peter is very concerned that by pouring money, gasoline onto the fire, in his metaphor, what you end up with is ultimately massive inflation down the pike. Do you think we're going to see that next year? And if not next year, do you think we're going to see it anytime soon?
Yeah, I think that's the risk. I don't disagree with Peter. I might disagree a little bit with the end game, but I think inflation is part of the end game. I'm not sure that you have a whole lot of choice now. I think government debt is needed to substitute for private debt. And
why?
In 1933, unemployment, non-farm payroll was 30% when Roosevelt started the great stimulus campaign, and it fell to 11%. So I don't know that you can sit back and do nothing right now. Well, let me finish. So I think that you have to substitute government debt for private debt.
Why?
We are going to pay the inflationary price, and hopefully, I think that's why Bernanke wants permission to issue Fed bonds to try and sterilize this debt further down the road.
Why do we need more debt? We have too much debt. We need to pay it back. We don't want to substitute government debt for private debt. We want less debt. We want to pay off debt.
Well, I agree with that, Peter, but I don't think we have the choice. I think
yes, we do.
No, I respectfully disagree that what we need to do is not allow another Great Depression to take place by not doing anything. I think
we're
we need to substitute government
Vince,
debt.
the problem is we're in the process of creating another Great Depression, just the way we created the Depression in the 1930s by doing exactly what you're advocating.
Well,
and
I argue differently, Peter, because I think in 1930 we shrunk the money supply by a third and world trade dropped by two-thirds because of Smoot-Hawley. And it wasn't until 1933 when Roosevelt started the stimulus campaign did the economy start to improve.
No, the worst of the recession.
1937 increase in interest rates.
Peter, answer Vince here.
No, the worst of the recession, I think, was in '36. Roosevelt didn't cure it. He made it worse. And the problem was in the 1920s, the Federal Reserve blew up a stock market bubble. When it burst, we needed to have a severe recession. But Hoover wouldn't let that happen. He tried to intervene. He tried to prop up companies. He tried to keep companies from failing. He did a lot of things. He was the most interventionist president we had ever had up until that point. That started the Great Depression. He handed the ball to Roosevelt. Roosevelt made one mistake after another. He compounded it, and it lasted all the way through the Second World War.
Peter,
we're going to do the same thing now, only we risk massive inflation on top of depression.
And in that picture, in that inflationary picture, Peter, there are some obvious bets as far as what investors can do with their money. I was noticing today the fact of the matter is that now you can buy the S&P 500 with 1 ounce of gold. That is to say that 1 ounce of gold is more valuable in today's dollar terms than the S&P 500. What's your take on where the inflation story goes from here?
Look, it's here. The Dow is now worth fewer than 10 ounces of gold. Looking at the Dow Jones, it started the year at 15 ounces of gold.
Well, I'm talking about the S&P 500.
I know, but I'm talking in terms of Dow right now because it started the year at 15 ounces of gold. Now it's worth less than 10. Of course, in 2000, the Dow was worth 43 ounces of gold. I think in 2009, the Dow is going to drop to below 7 ounces of gold, maybe as low as 5 ounces of gold. And over the next 5 to 10 years, the Dow will be worth just 1 ounce of gold, just the way the S&P is right now, which is almost a 90% decline from here.
Is that a bet on declining stocks, or is that a bet on gaining gold?
It's actually going to be a combination of both. It's going to be a huge decline in the real value of stocks and a rise in the price of gold as well.
Okay, Vince, obviously you have a totally different thesis here. So what are some of the ways that investors play in your thesis?
Well, first, I really hope Peter's wrong. I think Peter probably hopes he's wrong, too. I admire the conviction. He's been so right for quite some time now, too. I disagree about the historical interpretation of the 1930s, neither here nor there. We both agree to some extent that we're going to have an inflationary outcome. And if I was going to be optimistic about the market and say, well, I think the market's going to recover, and I'll play the early cyclicals, which would be your retailers, your financials, I think you're going to skip right by that and very quickly next year go into an inflation trade. Because I think if the Fed's at all successful, we're going to see velocity of money pick up again and inflation come back, and you want commodities and oil stocks.
So let me turn the conversation. Vince, do you think, and I'm going to ask the same question to you, Peter, so you've got a second to think, do you think 2009 economically and in the markets is going to be a better year than 2008 was?
I think so. Peak to trough, from the high we had in 2007 to the low we had in November of this year, the S&P was off 53%, which rivals the 1937 to 42 bear market of minus 60%. I think that this quarter, GDP is going to be down 6%, 7% or more. If you go back and take a look at the quarters since 1950, where the GDP was off 4% or more, there were 11 of them. The subsequent quarter, on average, was up about 1.7%, with a big dispersion. So what I'm hoping is that the worst comes this quarter, and that the Fed's stimulus, Peter and I would disagree whether it should do it or not, but the Fed's stimulus catches hold and the economy starts to improve next year.
So, Peter, your answer. Do you think it's going to be a better 2009 than 2008 or what?
Well, as far as the markets, I think the nominal decline in the U.S. markets will not be as great as it was in 2008, although the real decline, pricing the markets in gold, it could be as bad, if not worse. But as far as the actual economy, the economy is going to be much worse in 2009 than it was in 2008. Of course, the stimuluses are going to make the problems worse. The fundamentals of our economy are lousy. Structurally, we have serious rebalancing that needs to be done. Unfortunately, the government policy is interfering with the market's attempts to restore balance to our economy. They are exacerbating the underlying problems, making them much worse. So 2009, 2010 are going to be economic disasters.
On that cheery note, we're going to come back to both of you, Peter and Vince. I want to pursue, Peter, with you later on, the idea of if you think, as you do, that stimulus is going to compound the problems, what, if anything, would you have the government do? But we'll save that answer for when we hear from you in just a couple of minutes. Up next.